Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York on Wednesday, the 13th day of May, 2015, and this is the daily report for gold and silver. Tremendous upside move in the precious metals markets. Gold is surging, silver is surging, caught many traders, including myself, off guard as weak economic data did surface today, propelling the dollar significantly lower on the day. Buying also entering into the market in gold. When we take a look at the market's change today, currently up about $22 at $1214.60. The high has been $1218, an important high, $1218.50 with the low of $1190. And as I said, currently trading at $1214.50. Now, of that $1214.50, about half of that, or $10.50, is due to a weakening U.S. dollar, and $11.70 of that gain is contributing or contributed to normal trading or buying in the market. Very similar activity in the spot market. High a little bit higher, 1892 on the high, low 91.48, up about 1.8%, almost 2%. Silver, of course, a big mover, up over 3%, over $17, $17.13, up 60 cents on the day, with a low of $16.48 and a high of $17.23. So obviously a lot to cover on a day like today where we saw this tremendous upside move. Now, we've got to look at this move with a serious grain of salt or serious caveat. And the caveat is that if you look at the highs at around 19, you've got this really strong level of resistance that we've talked about that has been in the market, and we have seen the inability of the market really to break above this price point. We once again see the market moving right to that point and then stalling just before that. So before I get real excited to the upside, but I have to tell you that this is the kind of move we've been waiting for. But until we see actionable evidence that we're going to get any kind of a sustained rally, we absolutely need to see this market follow through and break above this price point and close above this price point. Because just to kind of meander and kind of trade to that point and move back down is going to tell us that we are still within this really tight defined trading range that's been the overall characteristic of the market for the last month and a half, almost 2 months. But traders on a short-term basis, and this is a very, very short-term chart. It is a 240-minute chart. In other words, what we're looking at here is simply 4 hours in terms of our time. So we've got a 4-hour Japanese average chart. You can see this defined breakout. You can see that we've got good candle strength in terms of the candle size itself. We had a bunch of false positives on the MACD back over the last couple of trading days. That's indicative of right here, but we're certainly not seeing that right now. In fact, what we're seeing is a widening of these two lines, short and long-term moving averages, or the MACD. We see that widening. We see momentum building. So we've got some real solid indications that we could be in for some sort of a sustained rally. However, when we take a look at our current and most recent activity in the market, this is a daily chart, and you know that I prefer this in terms of taking a look at the markets itself. You've got this defined area of just sideways trading action. You get this pop for a couple of days, and it returns right back to sideways, and now we've gotten this pop. That's why, to me, to really feel comfortable right now, we need to see effective closes above 1220. That, to me, traders, is absolutely critical. Now, when we look at our stochastics, that has aligned right now. That's not a good color for that, but that has aligned to have our short term cross below and now is pointing back up. If we look at our moving average, convergence, divergence on our daily chart, we have to really blow it up, but you can see that even on the daily chart on our MACD, Our faster moving average has crossed now above, and so we would look for something like that as a follow through on there. And also on our daily, we only really got this one false positive right here, but when we look at the moving average, convergence, divergence, it's signaling the potential for a real rally in the market. And when we blow up our stochastics, you can see that we do have the proper cross, and this is coming after quite a bit of noise right in here. When you get these points in which you got these markets crossing back and forth, that's a sideways trading market. We got that also here, but we are getting the cross. What we want to do is see if we can get some activity that looks more like this, where we see these stochastics truly remaining in place, meaning the distance between them, and then most importantly moving back towards 80 in terms of relative numbers. You want to look at overbought at 80 and oversold at 20. We're just above that at 36. So traders, there's no doubt today's surge in gold and silver were both dominated by a weak US dollar, as well as buying entering in the market. And as we saw from the Kitco Gold Index, it's about 50-50. In other words, half of it is due to a weakening dollar. Half of today's upside surge seems to be due to straight buying. Now, we're looking at our daily dollar chart and standard candlestick format. Here, we've actually put in our basic targets. Now, we talked about in terms of a basic target right at around 94, and what I was looking at was these series of bottoms that we saw right in here. We've absolutely fallen below that. We are now at 93.72, so we want to really look at these bottoms right here and kind of carry them through. And as you can see, the dollar has gone to this point but not broken through. It's not really tested this low, and that's based, of course, basically on these lows that we had back in February of this year, this being a daily chart. So that would be the first level that we would want to look at. We look at some of the other technical indicators which would give us some sort of insight in the market. And when we look at, for example, our MACD, let's go ahead and pull that up. What we see is the momentum is waning a little bit, but we still have some room to go on the downside according to these technical indicators. We also have some channels in here, and this downward channel that we have seen in the dollar. Again, this is a basic daily chart on our dollar index, but this basic channel, this downward sloping channel, is still absolutely intact. So we don't really have any strong indication that a bottom is in play in terms of the dollar weakness that we have seen recently. And then lastly, in terms of charts that we'll look at today for the dollar index, is going to be this weekly chart. You can see that both the MACD and the stochastics have been and turned strongly into a sell signal. That really happened a good month ago. We've seen this weakness begin, and we have this continuation. Now, in terms of basic levels of support in the market, this is that area of 94 that we have just breached. In terms of very, very strong support, we're not going to get any until about 92. That's the next real level, and it's simply based upon some of the lows in the market, but this being one of them right in here. So we could see further downside pressure in the dollar. And traders, lastly, I do want to take a look at silver. If you recall from the last couple of days, I have been looking at silver in a pretty optimistic manner. What we looked at was the fact that we had this upward sloping channel line. Unlike gold, we saw a basic distinction between the two markets, in which we saw silver really starting to kind of take off on its own, find support, and move up. At the same time, we saw gold moving sideways. But traders, take a look at this today. We have definitely broken above this channel line, which means that if we get a continuation of the upside moves in the precious metals, we're going to see silver outperform gold in terms of percentage gains. We many times will see that happen, a percentage gainer as well as percentage loser, because of the the thinness of the market, or the fact that there is less volume, less open interest. It's easier to move that market, but we have a defined true breakout above our former channels. Traders, I'm actually very excited because this brings us some real opportunities that we haven't seen over the last month. And the opportunities that I'm looking at are as follows. We're back to our gold chart, and here's the opportunities we're looking at. If the market currently trading at 12.1560 is unable to sustain a move above this and find some resistance, finds this as a ceiling that is at this point, or at this point in time I should say, still unbreakable, we've got a great sell even within the defined range, because our range would take us from, call it 12.15 back down to about 12.72, 12.82, or these lows. So even if it remains range bound, we've got a great play here. 2, if the market can move and close above this point at 12.20, 12.21, and we have a sustained rally, well, then we really have the opportunity to see this market really move to different areas. On the high side, about 12.65. The first area that I would really look at is about 12.38 to 12.40, and it's based on this top. But the point that I'm making is, when we're just trading in mid-range, or when we're trying to see if it's going to break through here, because we have a short play if it breaks below, we have a long play if it breaks above, but once we're just mired in this muck right here, it's very, very difficult to put on a trade. However, we are now at a point where if we see weakness, we can sell. If we see continuation of strength, which is what I believe could happen, but we have to see if there's follow-through. It's much too early to tell, but this is the kinds of opportunities that we've been waiting for, and I'm truly excited about it. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow on Thursday for another daily update review. Bye-bye.